Property group Stockland hopes to wrap up the takeover of retirement home operator Aevum quickly as the company moves to cash in on Australia's ageing population. That was the message as shareholders of Stockland gathered in Sydney today for the company's annual general meeting. Andrew Robertson reports.
In recent years, Stockland has taken less of a share market battering than many other players in the listed property space, which is why security holders were reasonably upbeat as they arrived at the company's annual general meeting.
Well, they've got a pretty good operation as far as the property's concerned. I like property as an investment.
Well, I think they're a good company. Yes, I think so.
Stockland Chairman Graham Bradley nonetheless opened the meeting with an acknowledgement of the pain security holders suffered as the company battled the global financial crisis.
Your board recognises that our capital raisings in 2009 have reduced distributions per security and that is disappointing to many security holders.
The Australian Shareholders Association took up the issue of security holder pain, noting that while Stockland's security price has fallen over the past few years, executive and board remuneration has gone the other way. Mr Bradley defended the company's performance.
2009 was a bad year for our entire sector, and that was necessarily has impacted the 5-year numbers that you've chosen to highlight. We had an unbroken record of 25 years of profit growth up until that period.
As one of Australia's biggest builders and sellers of houses, Stockland is taking a keen interest in where interest rates are heading.
Further increases in bank variable mortgage rates remain the most significant threat to a sustained recovery and have led to a concern about a downturn in the housing market.
Mr Quinn thinks this will happen in coming months, reducing Stockland's sales, which are currently at record levels. The Managing Director also addressed the $320 million takeover of retirement home operator Aevum, which will double Stockland's presence in the sector.
Aevum and Stockland are a good cultural fit, with a similar focus on resident wellbeing and quality developments. And we look forward to welcoming the Aevum residents and employees to Stockland.
Mr Quinn told the meeting Stockland now has 78% of Aevum shares and is looking to move quickly to the 90% threshold, which will allow it to compulsorily acquire the remaining 10%. With Australia's population ageing, retirement living is a key part of Stockland's growth strategy, and the chairman explained to security holders why he thought Stockland could prosper in that area.
It's been a very fragmented industry without companies with our strength, without our balance sheet, and without our brand name for quality associated with it. And therefore we think we can bring something quite distinctive.
The meeting re-elected Mr Bradley as chairman, as well as 3 other retiring directors, while the remuneration report attracted little in the way of dissenting comments from the floor.